Hi, everyone. Welcome to an absolutely packed and energetic trading webinar. Please close the doors, turn off the TV. You'll need a pen and paper and a cell phone as ever to take shots of the screen. Let me know you can see and hear me loud and clear. Also, let me know where you're from. We should have people not just from the UK, but usually the US to Australia. A bit late for you in Australia, a bit early in the US, particularly if you're on the West Coast. So let me know where you are from, and we're going to make this interactive. I want to hear lots of questions you might have. I'll do those in batches, mainly in the Q&A section, but in between as well. And we're going to do a poll, lots of polls where we'll share the results, what you think is going to happen with the markets. I'm going to tell you what I think is going to happen. I'm going to publish the first poll. There we go. Vladislav from Slovakia. I've been to Slovakia. I went to Lake Bled. That's Slovakia, isn't it? Not Slovenia. I do mix up the two. Went to Lake Bled and spoke at the beautiful business school that's out there as well. So thank you. Thanks for being on. And we've got a whole bunch of people coming on board now. Vladislav, Howard, Chris, Roland, Andrew, Julian, Richard, David, Dimpy, Graham, Edward, Anthony, John, Jeremy, David, Michael, Mamadou, Chandra, Ian, and so on and so forth. So welcome all. Peter's in Portugal. Any Londoners left? So let's share the screen and get on with it straight away because I've got so much to cover. This is what we're going to talk about. Okay. I think more people are going to be trading. And by the way, for those asking, this is live. More people are going to be trading in 2023 because I think buy and hold is not going to give us fantastic results, partly because higher interest rates and partly because of the headwinds in the market. Some of the air's being let out of the big boom we've had over the last few years. That's just the way it is. We will, of course, on a buy and hold, try and pick good stocks. Of course, we'll continue doing that. Not an issue. But that means more people are going to look to supplement through trading. And these are some of the trades we're going to look at a little bit later on. It's a standard retail platform, nothing special. All the data on there is live, real time, and free. And we're going to go through those. So we're going to go through everything from crypto to Apple, Amazon, Microsoft, S&P 500, so the US markets, sterling, US dollar. So we'll cover everything. Okay, FTSE, Google, JP Morgan, Ripple, Brent, oil, Royal Dutch Shell, sterling yen, and we could have done more. And I just picked out of this. There's about 300, if not more, instruments I could have selected. Excuse me while I clear my throat. Give me a second. And I've chosen several to go through. Okay, so we're going to go through that with live trading, live examples. So we're going to make it practical. All right, that's really important that you know that. And what we're going to do during the course of it is add a bit of the theory to the practical. All right, that's what we're going to do. Sunny London, I know. I was tanning earlier on. That's why I look so brown. Now, what does all of this mean? First things first, as you settle into your seats, it's not individual advice, financial advice, because I don't know you guys on the webinar, so it can't be individual financial advice. Now, when do people trade? Well, we polled 100 people randomly, and what we discovered is that most people are trading before and after work, and that makes sense, and a few of you are trading during the day. I'm going to, in this webinar, give you a process whereby I know you all lead busy lives. You've all got day jobs. You've got, better things to be doing than just sitting in front of a computer screen all day. You've got jobs or kids to look after, whatever else it might be. So what we're going to do in this webinar is I'm actually going to give you a business plan and a process and a strategy. So not just saying, oh, just buy this, do that. Well, that's useless if you've got to be in front of the computer screen all day and you need a business plan. So you need to know whether or not it's for you. Can trading make you money? Can it make you enough money? Is it worth your time and effort? We're going to do that as well. So we're going to look at when I think is the ideal time to trade. So we'll come to that as well. And I want to give you the biggest return on your time invested. And the reason for that is there's no point making, and I wrote about this in my Financial Times column many years ago, that most people trading make the same as minimum wage because they spend so many hours to earn so little money that they might as well be working at McDonald's. Okay, assuming McDonald's pays minimum wage. Now, we need to therefore either make more money or compress the time in which we do it. And so we're going to do that. What are the biggest reasons people don't think they can make it in trading? And we're going to overcome these hurdles in this webinar. The biggest reason they give is not enough time. So that's why I'm going to give you the process for time and no good, simple strategy. So we're going to go through the strategy. These are the bits we're going to go through: stop losses, entries, when to take profits, money management, so just how little you should put into a trade, and when to add to winners. Also, how to control emotions we'll cover as well. Okay, so we're going to cover all of those things. Peter's asked, it's MT4. Yeah, it's just bog standard MT4. It's broker independent, and therefore lots of brokers offer it for free. Okay, so all the data is live, real time, and free. And I wanted to pick a free platform because free is good. Okay, I don't know who owns it, but I know brokers throughout the world offer it for free. So we'll go through that. And because, like I said, it's live real-time data for free, I don't want you paying subscriptions for data. I don't want you paying subscriptions for data packages, charting packages, technical analysis packages, because you don't need to, because it's free. And again, I've written about this in my columns. Now, when you ask most people, and I put pounds here, but you could change that to US dollars. When you ask most people what their target income is per month, actually, sensibly, the vast majority of people we polled said 500 to 1,000 a month extra. They weren't saying, oh, I want $1 million a month extra. Obviously, everybody wants that. It was just 500 to 1,000 a month. And again, the reason we're going to look at trading from a very cautious perspective is because, as you will know, the vast majority of people lose money. So how do we avoid people losing money? Well, we're going to start with a demo account with zero capital to see if we can learn the skills. And if you learn the skills and are consistently profitable on a demo account, then we'll do live cash. And what you want to do is start with, say, 500 as a target per month, because if you've got the skills to make 500, you could have got the skills to make 1,000. If you've got the skills to make 1,000, you can make 2,000, and so on. There's no point going in with big account sizes. Now, brokers and subscription providers want you to go with big sizes because they get a kickback from the losses you make. I have no conflict of interest with you. I just want you to be profitable. Okay, so you go, yeah, that Alpesh was useful and not useless. So we want to start off with just a small target of zero capital initially, and then eventually see if we can make 500 a month consistently. Some months more, some months less, so it averages out. There's no guarantees in the markets, and given that the majority of people lose money trading, we've got to make sure we do it in that structured way so we don't fall into the traps of losing money, because you can lose it too easily. So we want to avoid doing that. The other thing we found is your account equity, the amount of capital you have in your account, impacts your probability of being profitable. I want to draw this out for you. So one way of actually becoming more profitable, funnily enough, is not a better strategy, which is what people think. They think, oh, my strategy is rubbish. Actually, you've got a 20% probability of being profitable. Yeah, percentage of people who are profitable. If you've got $1,000, and that almost doubles to 40% roughly if you've got $5,000 to $10,000. Well, wait a minute. How can that happen? That's because you're trading a smaller amount of your overall capital, so you're less likely after a string of losses to be wiped out and lose all your money. Again, the trick to being successful in trading is to make sure you're trading small amounts, not large ones. When I interviewed the world's leading traders, I thought they were going to say, oh, we're super rich, because I interviewed them for this book published by the Financial Times, Mind of a Trader, Lessons in Trading Strategy from the World's Leading Traders. So I interviewed 10 of the world's leading traders because I wanted to be a trader full time. I thought I'd better meet them. I thought they were all going to say to me, oh, yeah, Alpesh, yeah, we're rich because we just take big, bold bets. You know, we just go, boom, all in. They didn't. Ironically, they all said, actually, we've got to make sure we don't lose the money. Otherwise, we're sacked or our investors will pull the plug. And that was contrary to everything I thought would be the case. And again, we're going to take that process in this webinar, where what you're going to be doing is you're going to be looking at money management tricks, risk management tricks to increase your chances of being profitable. Okay, so it's not just all about the strategy, though we're going to do strategy of when do you enter, which is what everybody else talks about. Oh, yeah, we've got sniper-like entry signals and all this BS. Okay, well, that's one small minor part of it. What about how much time you're having to spend in front of the screen? What about the probability of being profitable based on the instruments you're trading? And we'll give you the data on that as well. So we're going to go through all of that. Now, as you can tell, probably from the tons of books behind me which I've written, and they've been translated into lots of languages, I am passionate about trading, and I have been from a young age. And for me, it is the best entrepreneurial venture. People at this time of the year are looking at, they've got their Christmas expenses and they're looking at New Year's resolutions, and they've got a bit of quiet time to think out what side hustle, what extra ways of adding to money should they do, particularly given inflation cost of living. Now, I think as an entrepreneurial venture, I will always fly the flag that I think trading is the best business in the world. And I'll tell you why. You might say, oh, yeah, but people lose money, don't they? 90% of businesses fail within 3 years. 90% of businesses fail within 3 years. 40% of traders make money, 60% lose money. And I'll show you the screenshots of that, because the brokers have to give you that data by law now. Before, they didn't have to. And when they didn't have to tell you that data, 10% used to make money and 90% lost. And if you go to bad brokers to this day, 90% still lose. So we're going to talk brokers as well, and which ones won't rip you off so much and so on. Why do I think it's the best business in the world? Well, it's not time consuming. We know from the broker data, which has to be lawful because they're regulated and they have to show the details to the broker, that about 30 to 40% make money. So that's pretty good for a business. Potential for good return? Potential. There's no guarantees of any business. You want to sell stuff on Amazon? Be my guest. There's no guarantees of return. If you want guaranteed returns, go get a job. Zero startup capital needed to learn. Great. No office costs, no staff costs, no membership costs, right? So for me, you will always get me talking about why I think trading is the absolute best business in the world to be in. Okay, I'm just going to end the poll here so we can see that as well. And Sandeep, I'll do that at the end. FTSE, will it be higher? Well, the majority of you think by the end of next year it will indeed be higher. 56% of you. Let's put another poll up. Okay, so there you go. 56% of you think it's going to be higher. Well, what about the American markets? Usually people are always more optimistic about those. Probably explains a lot as well. Okay, so let's move on to the biggest mistakes people make. And these are what in this webinar we're going to remove. We're going to remove your desire to trade too often. If you think about it, if it was as easy as how frequently you bang the keyboard and money magically appears in your bank account, then any idiot could do it. It's not. It is, I'm afraid, about quality over quantity. So when we look at this number of positions, actually we look at 20 to 25, which is what I'm going to recommend. I'm going to send you those data points in a second on a slide, so don't worry. When we look at this, I've just put fewer on here. What have we got? 1, 2, 3, 4, 5, 15, because otherwise the screen will get too crowded. When we look at these, it is still about picking quality trades. It's not about trading all of them constantly, okay? And we're going to give you that process in this as well. What we also discovered, we did a little experiment. When we gave people cell phones to trade with, as opposed to being at their desk for 15 minutes before or after work, we found that those with greater access to the markets tended to trade out of boredom, impatience, or revenge trading. They did poor quality trades, in other words. And again, it's something that Pat Arbor told me about would happen. He was chairman of the Chicago Board of Trade, the world's largest exchange, okay, and a floor trader there. So when I met him in Chicago, I was shocked. I thought he'd say, oh no, we just trade large amounts and do a shed load of trades and we can just turn things around. We're just really skilled. Okay, we're like good footballers. Give us a ball, any position, we can just still score a goal. No, it wasn't the case. So in this webinar, what we've got to do is we've got to work out what the right amount is. And we're going to start off with 7 cents or 7 pence a point. And that doesn't matter whether you're doing CFDs, foreign exchange, or spread bets. All trading gets translated into the same language. You might be buying stocks. It gets translated into the same language. Pounds per point, okay? Pounds per point, or dollars per point, or per pip. And we're going to do a lot less than £1. Anybody who tells you to start off with them with a subscription, start with £1 a point, are getting kickbacks from brokers, guaranteed. Because they want you to lose the money and they get a kickback from the losses that are made. All right, just ask them, are you getting kickback from the broker? And they've got to tell you by law, and they will be. All right, it's as simple as that. We're going to trade a lot smaller. Why? Well, why do you want to risk more money if you don't have to? You're developing a skill. It's like learning to drive. Why do you want to go out in your parents' car on the motorway on day one when you don't need to? You can go in a driving instructor's car in a car park in Tesco's and keep it safe. So it's all about that safety, because that's what builds up the business of trading. If it wasn't the case, everybody would be bloody rich, wouldn't they? We're not going to pay subscriptions. It's another big mistake. You know, look, I already showed you the platform where you don't even have data costs ever. You get all that live data and all the technicals and everything else. There's some costs you've already saved. Why? Well, because if you're going to treat it like a business, you can't keep having money sprayed out of it and say, oh, I'll pay for this or pay for that each month, each day, each week. We don't want any of that. Also, look, IT guys are great at developing little software pieces and blah, blah, blah. But if they're not regulated financially, don't actually understand the responsibilities and how you manage money, because you're going to be managing your own money. You're going to be doing this. You're going to be managing your own money. You're going to be your own fund manager. Okay, if they don't understand that part, then it's easy for them to say, oh, just do this, just do that, just do that. All right. The other mistake people make is they pick from very few instruments. Now, we're going to pick from instruments which are not correlated, which is why then hopefully every day the idea is that you've got some long trades, some short trades. You've got Amazon alongside JP Morgan, or you've got Brent oil against Apple, and they should be relatively uncorrelated. So you might be short one, long the other, or you're trading different timeframes. What that makes sure is that we're always taking some money out of the market. Okay, we're always taking money out of the market, and that's the name of the game. That's what we're looking to do. We're always looking to take a bit of capital out of the market by having uncorrelated assets. Now you might say, well, I've never traded oil, I've never traded currency, I've never traded Apple or whatever. It's like a supermarket. You're buying low, selling high. What do you care what you're trading? Now, you've got to get out of the mindset that I only ever look at one thing, because then you're going to do low quality trades. We need a bigger group of trades to look at. And we within the fund, we've got people whose job it is to maybe look at just equities or just a set of currencies. Okay, so they've got enough choice. Because if we said to them, oh, you can only look at this tiny little thing, they're going to come up with rubbish results. And also, we're going to talk brokers in the Q&A. So many of them rip you off, especially if they're regulated out of Malta or Cyprus. And also, some of them will spike the prices. I mean, I'm afraid my friends at IG Index will, in the middle of the night, suddenly you get a price spike, and they'll say, oh, it must be a data error. Yeah, and it's knocked out your stops, and you've just lost your money. Okay, so how do we avoid that? How do we avoid all of those problems? Just let me know what you can see on screen. You should be able to see on screen a slide which says biggest trading mistakes. Just let me know that is indeed the slide you can see on the screen, because for some reason on mine, it's not sort of moving forward. Okay, as well. Now, next question. We're also going to pick our instruments based on any edge we can get. If we get edge and data like this, and this came from an actual broker, one of the things that I was able to do when I was writing various books, because I love the whole art of trading, is I would meet not just the leading traders, but meet the brokers and say, look, give me anonymized data on which of your clients do well in aggregate. So, it doesn't breach any data laws. In aggregate, do men do better than women? Do they trade certain instruments? Are they more profitable on certain instruments than others? Are they more profitable at certain times of the day than others? Are people of certain ethnicities, age groups, whatever? Okay, give me the data so we can look at it in generic, so it doesn't impact the broker. They don't care. And one of the things we found was this piece of data, which shows that certain instruments had a greater probability of being profitable. Okay, now that's interesting, because it's not the case that you're going to have a trading strategy and then apply it at any time across every instrument. That'd be stupid, because we know certain instruments are a bit easier, maybe they're a bit quieter than others. So it's as simple as that. Okay, as well, right? So that's something which I think is really important. I want you guys to appreciate as well. And you can take a picture of that if you wish. Take a screenshot of that as well as you wish. Now, next slide. What I want to show you here is one of the reasons why people are going to be more motivated in 2023 to start trading. But that's a double-edged sword. You don't want to start trading because you think, oh, I need to earn extra money to beat inflation and cost of living, and then find that you've dug a bigger hole for yourself. Okay, and that's why I keep talking about the cautionary part and that returns aren't guaranteed. I know it bores the pants off some of you, but trust me on this one. Been doing this for decades to have seen some horror stories. I've actually been an expert witness in court when traders have been prosecuted because they lost money. Did you know it's a criminal offense, criminal, to go bankrupt through gambling? And so I was an expert witness to show whether or not the strategy the person was employing was gambling, i.e. he was just taking willy-nilly risk, or whether there was a proper approach to it, but he just happened to lose money and go bankrupt. That was one case. I've been an expert witness in others as well. One against Man Group, the broker, MF Global, before I get sued, MF Global, but where the client had lost £21 million because the brokers had ripped him off, and he won that money back thanks to my expert testimony. And we had one hell of a party in Vegas. So I've seen a lot of this stuff, so I'm going to give you the insights on that. And of course, there's many other reasons why we're expecting the markets to fall. There's lots of worries about technology, cyber attacks, war. And to put that into another context, this is Apple. The stocks we were relying on for buy and hold, they're not holding up so much. And you've got Apple there, which has fallen below its support. It might fall maybe even another 35%. And this is a reason why people will be trading. Because if I show you this, which is also Apple, and each one of these bars is 15 minutes, you can see where and why there's opportunities to short. That's the red arrow. Anytime you see a red arrow means to go short. A green arrow means to go long. The yellow line is the stop loss, which thankfully wasn't hit, but then the market bounced up. That's why they're going to look at trading, because they're going to say, I'm not just going to sit there all year and get my face punched in. I want to trade, but trading takes time. Therefore, you need a good return on time invested, and that will come into our business plan. Okay, so now you know the reasons, and a lot of these you might already have known. By the way, that's my worry with Apple as to what may well happen, is that we end up, worst case, that's my bear case, that's my best case, that from roughly existing levels it goes up there. Right, and it's not because it's a bad company. You can make excuses if you wish. S&P 500, again, similar reason why buy and hold is going to have more headwinds. We're not going to get money as easily as we thought we were 2 years ago, 3 years ago, 4 years ago, how easy it was in the markets. And you can see that we are still on that downward channel. And every time it gets hit, the bulls get disappointed, thinking, oh, we've turned around, we've hit the bottom. And it's knocked 3 times on that door, and each time it's moved lower. So the most pessimistic case is 30% lower in a year. I don't think that'll happen. It's the most pessimistic. I suspect at some point it will actually break above this at some point, but it'll, you know, those headwinds mean people are going to be trading more. That's my point. And I've drawn what we've seen. We're down, at the worst case, we were down 26% on this. And that's an index. That's an index. Okay. And some would say from current levels, we can still drop another 30%. So all of those things make me think, yeah, this year I'm going to have to work a bit harder for my money, for my pension, my SIP. I'm going to have to spend a bit more time trading. I've still got my investments. I still own Apple and Amazon and AbbVie and some others I'll come to in a second. Okay. Katara Energy, I think I've still got. My reasons for trading, 1 second on this. Fun, freedom, fulfillment, funds, philanthropy. Okay. It was initially funds. We've got to make sure that the strategy that I give you, the process, the business process, and the plan I give you will allow you to be fulfilled, give you freedom. Because if I handcuff you to a desk and say, you've got to keep looking at this all day long, what's the point? People who are trying to sell you subscriptions will want you to be in front of the computer all the time, because otherwise, what's the point of paying their subscriptions, right? Well, actually, I need you to get away from the bloody desk, because otherwise you're going to trade out of boredom and you won't be free to do it. So I want you just to place the quality trades and then leave it, because the more you stare at it, and men are particularly prone to do this, the more you're going to fiddle with it and blow yourself up. Okay. There's the data from 3 different brokers. You can see it down here. Okay. You can see it down here. I've taken 3 different ones. One was CMC, one was IG, and I can't remember what the third one was, but anyway. And it shows you that 66% lose money with one of them, 66% with another, and 61%. We'll try and focus on they have to put this on their homepages. Okay, so I'm not disclosing something secret. They have to disclose. So that means 40% are making money, which is better than any other business that I'm aware of. Okay, because most businesses go bankrupt in 3 years. They go bust in 3 years. 90% of business go bust in 3 years. And that's not just a UK statistic. That's actually a universal one, roughly around the Western world anyway, and the US as well. You can Google it. Right now, given that they've only got 2 decisions to make, when to buy and when to sell, how come that's the case? How come that's the case? And that's what we're going to deal with. So if I dealt with, I wanted to show you. So a couple of days ago, we did the live webinar, and I said, that on Shell, that turned out to be the best trade, actually, the Shell one. So I'm going to show you that for a second. So there was a short from a couple of days ago from that webinar, and then it just collapsed. Now, did I know it was going to fall that far? No. Did I know it was going to fall? No. I had a momentum signal. So we'll talk about that. How do we get that? How do we do that? We can do that manually, or we can use computers to do it, just like WordPress. You can handwrite it, or you can do it. And I'll give you the manual rules. So I'll teach you how to handwrite.
but we automate all of this now so that it makes life a bit easier for us in the world what is 2022. So 2023 coming. So there we go. Right, that happened. That was a good one. That's all it is. That's what we're looking for. There's no emotion, so it takes care of the trading psychology part, because 1 minute could be long, next minute you're going short. So what we need to know is, how do we break that down and how do we do it? There's only two decisions to make, whether to buy or to sell, yet the majority lose money. We want to get into the 40% who make money, and surely it must be possible. By the way, that number, 40% making money, is the highest I've ever known it. And I've been in this industry for, well, my second book, Trading Online, was published in 1998. Okay, so I've been in this industry for over a millennium, literally. So that being the case, this is the highest I've ever known it. Why? Why are more people making money? Is it because they've got cleverer? Is it because of the tools that are out there? It might be those things. Is it because brokers are more generous? No. The reason more people are making money trading now, and you just look at the data on the brokerage websites, is because the brokers have to reveal the data. So now they have to, and it has to be prominent at the top of their websites, which means that they're competing on that number. So the guy who's only letting their clients win 66% of the time is losing business to the one who's letting their clients win more. Okay, so that's why I think that number is edging towards that. Eventually they'll just collude tacitly, because it's a criminal offense to collude in business overtly, but they'll tacitly collude and they'll come to some kind of equilibrium. Maybe 55% lose, 45% make money, but that's the pressure they're under, because they've got to disclose the numbers. Now that's good news for us, because it means we're in a better position than we've ever been, but we've got to make use of the opportunity. No point saying, oh, there's lots of opportunities in the world, but you're dirt broke, because you've still got to make use of that opportunity. Sterling yen. Yes. Okay, I'm going to do that. Dan has asked me just to look at the sterling yen. That's the sterling yen one that I had on, which again was from 2 days ago. We were short from the 28th, which was what, around here-ish. And actually sterling yen has been surprisingly smooth. What our business is to find the instruments where there's smooth trends. Now look at this. That was a losing trade. Short, didn't work out. That didn't make anything. Waste of time. That made money. Great. That made it, and this killed it. But how do I go from being long to going short? Well, because I have no emotions invested in sterling or yen. In fact, I know nothing about the Japanese economy, and I couldn't care less. Okay. And how come you go from being bullish on pounds to being bearish on pounds within the space of 12 hours? Okay. Are you quasi-quartang? What is going on? No, it's because we're just following the trends. And that's what we're going to teach you. So you don't need to have a master's degree in economics, which I do have, but you don't need it for any of this. And you don't need to be looking at the screen all the time. Okay. So I think I've done enough of the background setup on what we're trying to achieve and what our goals are to now get on with it. Now, the strategy we're going to develop is this. I'm sorry, it's a bit tongue-in-cheek where I put how to get rich trading, because that's actually what you're all here for, but it's not, there's no guarantees. Now, prices can only do one of four things, okay? So the strategy we're going to go through is, I'm building it up so you understand it. There's no point saying, oh, if it's a Monday, buy, and if it's a Tuesday, sell. I mean, and then you go away, okay? Because then you don't understand what the hell's going on. You need to understand it if you don't mind, and I like to teach people this properly, okay? Properly as well. Jazz, the answer is yes. Peter said, I think it's now 70% on IG, 70%. So that means only 30% are losing. So get rid of IG then. Don't use them. Simple as that. They're ripping that many people off. Don't use them. It's really simple. Look at the brokers. How many are losing? How many are winning? Go with the ones who are letting more people keep the money. Open accounts with multiple brokers, right? Sack the ones who aren't. So if IG is 70%, 79%, sorry, he said 79, my eyes are gone. 79% are losing with IG. Screw them. They're a listed company. They need to hit their quarterly profits. And so what they've done is that 6 monthly profits, they've obviously decided to screw the clients if that's the case. If they're only allowing 21% of their clients to make money, sack them, close your account, do it now. How to get rich trading. Okay, so you as private investor will do the exact opposite to what we do as professionals. In other words, the easy one is when the price goes up and up. Now, of course, I wish I had a time machine or a crystal ball where every trade I did looked like this. They don't. Okay, and I'll tell you how often I'm wrong. A little bit better than a coin, 50-50. You might think, well, you're bloody rubbish. Actually, the best traders in the world are a little bit better than a coin. Not much, but a tiny bit. Okay, they're about 51%, 49. Yeah, we're pretty difficult. And if you want proof, Hedge Fund Manager of the Year, Bill Lipschutz, he's in the book, and he tells you exactly that. So this notion that, oh yeah, we've got a sniper strategy, you're going to be right 9 times out of 10, 10 times out of 10, absolute nonsense as well. Up and up, that's the easy one. But you know what private investors do? The biggest mistake they make is it goes up a little bit, they've traded too large a size, they panic, they take their profits and they run. What do professionals do? Winners add to winners. We add at that point. Now, only when we're advanced and experienced. Otherwise, if you're a beginner, yes, you take your profit, you're a beginner. When you get a bit more advanced and confident, winners add to winners. Write that down. I didn't invent that. A hedge fund manager invented that. Winners add to winners. We'll take the profits we made here, it might be £100, and we open a new position. And if that happens, we've made more than you have. Simple. And we're going to need to make more than you have because this happens the other 3 times. Okay, so that 25% of the time is where we shore up the capital. Now, I want you to write this down. 20% of your profits, if you're a professional trader, 20% of your profits will come from 80% of your trades, or 80% of your trades will produce 20% of your profits. What? Alpesh, surely 100% of my trades produce 100% of my profits. No, because some of your trades will be losing, loss-making. 80% of your trades will produce 20% of your profits. What does that actually mean? I'll show you in a slide in a second. But before I do that, let me just show you this part. Okay, when it goes like this, the private investor, it goes up, then comes down. Private investor will probably still hold on. The problem with that is it could go like this. Whereas the professional will get out. He'll say, well, what I expected didn't happen. I'm stopped out. Simple as that. Or it might do this. It falls. Well, the professional gets stopped out. He gets out. The private investor just holds on. It goes back up and they think, oh, I held on. It's okay. It's okay. I've done well. No, because the next time this could happen. And what the professional is always trying to avoid is this. How do they do it? Well, when it goes down a bit, we get out. So we have a lot of losses because we get out if it drops a little bit. You don't. Do you know what you do? You hold on and take the loss, or worse still, you add to your losing position. You average down. Losers add to losers, right? The difference between me and you is essentially on every single thing the price can do, I behave differently. When it goes up, I add to my winners. When it goes down, I get out. I get out a lot quicker than you do. It's as simple as that. And if you want to look at the maths on it, you can look at it in your own time. You can take a picture of that. Yeah. So we're making our money from the 20% of trades where we can add to our winners and it works out. 80% of the time, we make nothing, or we make a tiny loss or a tiny gain. And the tiny loss and the tiny gain cancel each other out. So 80% of the time, okay, we don't do anything. See, these all cancel each other out. They mean nothing. That's 20, 25% of the time. That's all it is. And that's the maths of it. And if you think about it, statistically, all that the markets can do is either go up and up, or up and down, or down and up, or down and down. That's all it can ever do anyway. That's it. That's logically all it can do. And if you break that down, that must be the case. So how do we then turn that into a strategy, into more rules? So now we've already got one rule: losers add to losers, winners add to winners. But when do we add to the winner? Okay, when do we take the exit? But I wanted to explain this to you because the reason I wanted to explain it to you is because if you don't understand the background, then we're all a bit screwed. By the way, watch to the end. I'm going to give you a free download of that Mind of a Trader, Lessons in Trading Strategy from the world's leading traders, including my mentor, Bill Lipschutz, who was global head of Forex trading at Salomon Brothers, which meant he was the largest Forex trader in the world. He was hedge fund manager of the year 3 or 4 years ago as well. So the guy still got it. And he's the one who taught me the most about trading. But there's 9 other people in there, and you get a free download at the end of the webinar. So you all leave the webinar going, yeah, that Alpesh was all right. This is an example, right? So, and it could be any brokerage. You could use ETX. You could, I think it's changed their name now. You could use whatever, City Index, name a broker. You could use CMC. Doesn't matter. Could be interactive brokers. This is sterling US dollar 1 hour bars. Each one of these bars is an hour. That's the sell. Okay, so we got the sell. And then something happened that the trend was going up and we went long. Now, trader 1 in that makes £500. Trader 2 makes 5,000. Trader 3 makes 5 million. They both had the same data. They both got in and out at the same time. So what was the difference? Just the capital they had. That's the massive scalability opportunity in this business. The massive scalability opportunity in the business, unlike any other business, is you might start off with the same data George Soros has and everybody else, and you make £500. But because you've got the same data and the same abilities to scale, you might go up to millions. It's been my journey, is to start from pennies. I didn't have a silver spoon in my mouth, and then just increase it. The only worry you have to worry about is not, oh, bigger warehouse, more staff costs, more overheads, entering new global markets. There's none of that. That's why it's the best business in the world. This is what your trading results are going to look like. So when you go to the end of the year to your accountant, this is what it's going to look like, okay? If you're a professional. And our strategy will have to make sure this is the output. If this is not the output of your trading, you're screwed, okay? As well, on that, FX Pro 79%, CMC IG. Have a look at Intertrader. Have a look at Intertrader for me, Vladislav. And if some of you could look at some of the other brokers for me while you're on, we'll update the audience as well and see what the other brokers are doing. So have a look at City Index, have a look at, as I said, Interactive, have a look at eToro, have a look at a whole load of them, and just give me the percentages of who's winning, losing, see if we can get the live data on which ones are doing better at the moment, and that'll be helpful. Got my audience working for me now on this, if you could. Right, so where are we on this again? Where are we now? Our job, this is how you get rich. You don't have big losses. Oh, bloody hell, but thank you very much for telling us something bloody obvious. Yeah, well, you'd be surprised at how few people actually bloody well know that. Your trading is going to be such, and that's why we're not going to add to losers, and we're going to focus a lot on making sure we get the hell out of our losses very bloody quickly. Yes, we're going to have small losses and small wins. Actually, 80% of our trades are going to be small losses and small wins. But Alpesh, surely we came on this webinar because you've got a crystal ball, see into the future, and you're going to give us some clever little strategy because you once cleaned floors at BNY Mellon. There's some idiot on the internet saying, oh, he worked at BNY Mellon once, and therefore he's equipped to tell you about trading. He hasn't got a bloody clue about trading. Actually, we don't have a crystal ball. We're not right 10 times out of 10, 9 times, or even 8 or 7. If we have a winning streak, we might be right 7 times out of 10. But that's like saying I threw a coin and it came up heads 7 times out of 10. What does that mean? What, you're a professional coin tosser? Doesn't mean anything. Okay, so it's about this. This is where we're going to add to the wins. And that's the important part. And I need you to understand this. If you don't understand this starting part, and if you haven't got the patience to understand the starting part, you're never going to make money trading. Because if you don't have the foundations to understand why you're doing something, you won't continue doing it. Okay. And the other thing that I don't want you doing is having lots and lots of screens. Ignore the fact that I do. Lots and lots of screens. You just need one screen. All right. So, and we're not going to be in front of it. Now, I know there's lots of instruments, and out of boredom and tedium, you're going to give up on one set and go to another. We're going to try and fix about 12 to 24 instruments to scan every morning. Okay, I'm going to give you the data, the process in a second, in a chart in a second, how long you take. You're going to scan these for 15 minutes, and we're going to pick one trade to place. And I'm going to give you the business plan to show you that is ample money for you to make the 500 a month or 1,000 a month. And then if you've got the skills to make 1,000, you can make 2. If you can make 2, you can make 4. There's no guarantees you'll make it. There's no guarantees. It's not a bank account that you're going to make that every month. So we'll need the business plan for that reason, to work out, well, how much might we make? Is it worth our effort? And I think it is worth our effort, given the amount of choice we have. One of the most critical things I have to get through, and I end up arguing with people, is this. Okay? Is this. It's not whether you're right or wrong, but how much you make when you're right and how much you lose when you're wrong. If you look at George Soros's book, The Alchemy of Finance, he has a trading diary at the back. He's only right 50% of the time. If you look at Bill Lipschutz, he's only right 40% of the time. You might think, wait a minute, these guys are bloody billionaires. What? They're right? They're rich by being wrong a lot? Well, I'm going to explain how. And this is also why private investors screw up, because when they get losses, they think, oh, I can only get rich if I double down on my losses and I don't take the loss. Actually, it's not true. Okay, so we need to look at that. So let's look at what all trading is about. It's about these things. Selma, all right, it's about these things. So let's start off with the stop losses first and foremost. And let me pick, no, that's a good instrument to pick. Let's pick Amazon. Okay, now this could have been a currency, it could have been a crypto, it doesn't matter, they're all the same. They're all prices which move in waves and therefore have momentum and trends. This is Amazon, each one of those bars is 15 minutes. Now, what we need to do is let's start off with probably the most important thing, which is how not to lose money. So, stop losses, Okay. Now, first things first, see that yellow line? We get the computer to draw it for us. I'll give you the manual rules now. Now, when I met the world's leading traders, I thought they would say, oh, we don't use stop losses. We're just right all the time. Not true. How was I to know whether they could have said that? That's reasonable. That's plausible, isn't it? Oh, we're just really good. We don't need stop losses. Or it's like saying I'm a really good driver. I don't need a seatbelt. That's plausible. It's reasonable. They never said that. And this is what opened my eye. I thought, oh my God, everything I thought was true isn't. It's the exact opposite. And of course it is, because if it wasn't, everybody would be rich. So how do they set their stop losses? Two aspects to a stop loss. One, all the hedge funds I spoke to had two characteristics with all their stop losses. One was they use volatility-based stop losses. I'll explain that. Number two is they had volatility-based position sizing. So you can write that down, all right? And rule number three, losers add to losers. They never added to their losing positions. This is trading. We're not talking about investing. We're talking about trading. They never added to their losing positions as well. Okay. I'll only mention the brokers that I've heard of. I'll do it at the end because some you've mentioned that I've never heard of. So I don't want to necessarily mention them as well. Thank you, Vladislav, for doing this. I'll do the brokerage bit at the end because quite a few that you've given me as well. Chris, thank you as well. I'll have to check that they're regulated by the FCA because I don't want to mention a brokerage which says only 50% lose or win and then discover that they've actually not got a, they're not regulated. So volatility-based stop loss simply means this. See each of those bars, could be a 15-minute bar, could be 1 hour, whatever you're trading. And I'll tell you my favorite timeframes to trade in a second. You can write it down because that is a component of making money, the timeframes you trade, the instruments you trade, right? Volatility-based stop just means if that's more volatile on average, so you can say you can do that by experience, by eye, or 2 times average, or 2.75 times average true range. Basically, not too close, not too far is what I'm saying. You don't want to be stopped out by noise. The more volatile the market, further away the stop loss, the less volatile, closer the stop loss, right? Volatility-based stop loss. So it's bespoke to every instrument and market condition. We just get the computer to work out how volatile the market is and put the stop loss accordingly. Now, if you put it too close, you're going to get stopped out by noise. If you put it too far, it's pointless having it. But Alpesh, if the market's more volatile and the stop loss is further away, surely we're going to lose more money. No, volatility-based position sizing. In other words, if the stop loss is further away, you reduce your position size so you don't lose more money. Okay, so you always lose the same proportion. What proportion? That we'll discuss in the business plan. Okay, volatility-based position size and stop loss means you're never going to have a big loss. Fantastic. Simple, guaranteed. You can't possibly. Well, it depends what size you do the trade. Well, we'll talk about that in the business plan. We'll make sure it's sufficiently small that whatever happens, you can't have a big loss. Whatever happens, you can't have a big loss. Got it? Okay, well, what the hell's this dotted line up here then, mister? Whoops, let me come to that dotted line. So you see that distance from here to there? Well, the mirror of that is this dotted line. And that, if you're a beginner, is where you'll take your profits. But as you get more advanced, is where you'll add to your winners. Okay, it's where you'll add to your winners. Now, we get the computer system to, we put the text up here, so it just does it for our trainees. We use this for training our trainees because we can't train them on real capital because obviously that's client money and it'd be illegal to train people on client monies. So when we train them up with this, and we give them $1,000 and we show them all of this and train them up, what we show them is we take them from being a beginner to then adding to winners. And this stop loss, and this is really important, going back to the stop loss. So you've written down VSL, VPS, losers add to losers. That is a trailing stepped stop loss. In other words, when this price goes up to there, only then does this move up to here. Okay. Now that gives, there's pros and cons to that, gives more room. We can discuss pros and cons later, but it gives more room for maneuver. That is the essence of the stop loss. And also now you know where you're adding to winners. And when you add to that winner, you only do it once per position, max twice, and it has its own stop loss, obviously, at that point. And it will also step up. Now, that's pretty easy to do nowadays with a broker. You just tell them, I'm entering here, stop loss is here, trailing stepped, and add a new position if the price gets to this. Once you get used to it, it's really easy, and the brokers can even train you up because it's in their interest to train you up, okay? Now, don't worry, we're going to go through some of this stuff later on again. So we've covered limit order, which is take profit if you're a beginner, where that is. Stop loss, how to handle that, where that is. Trading psychology is removed because we're just following our rules. The best way not to be emotional about anything is to have a set of rules. So we'll come to the entry, which is the most important thing after the business plan, which we're about to do in a second. And how much money we put in, that comes in the business plan. So we're going to do money and entry, additional positions we've done as well. I know I ran through it a little bit quicker. Can I right at the end tell you something that my hedge fund's doing? With technology we spun out of the hedge fund, I copied the idea of Jeff Bezos, who was a hedge fund manager at D.E. Shaw before he set up the technology company Amazon. And I think we've got $1 billion business, which we're going to get venture capital into and then float on the stock market. I'm going to talk about it in the last 10 minutes. You don't have to listen and wait, hang around for it. But the reason I ask for your permission is sometimes when I tell people, they go, oh, why did you talk about yourself and your plans? We don't want to know about you. Give us what we want. Anyway, so I'll put that in there. This is how we're going to trade. So let's talk entries and business plan. Okay, this is how we're going to trade. This is from Winton Capital. They're based out of Hammersmith. David Harding is the hedge fund manager behind it. Sir David Harding is the hedge fund manager behind it, sir, as of a year ago. And he, this is a slide I've stolen from one of their presentations. The reason is I felt it would give more credibility than me just drawing it, that a multi-billion-dollar hedge fund does it. And they follow trends, and that's what we're going to do. We're just going to ride coattails of market moves that others have made. We can't get in at the bottom of a trend. Anybody who tells you they can is lying, because that means that they've got a crystal ball. There'll be necessarily a lag, and then we'll buy them. People go, a lag, that's a lagging indicator. Oh, and then they have a heart attack. Okay, similarly, when it comes to selling, we won't get out there. We're going to have a lag. We're not the only ones doing it. Billion-dollar funds do it. That's Amazon. I've blown up the buy and sell picture on it. Whoops, sorry. Let me remove the screen share so you can see it properly. There you go. That's Amazon. Okay, that's Amazon out there. All right. As well, we'll talk about gapping in a second, Jonathan. Essentially avoiding opening a new position on a Friday, but sometimes gaps happen, and that's part of the business plan. Okay, so 50% of the time they happen in your favor, 50% against you. There's an example here, actually, now that you've mentioned gaps. Where's it gone? Obviously, if you didn't get in and you saw the signal and it was too late and you saw it already jumped up, then you wouldn't get in late. I mean, you're not going to buy something which signaled for you to get it $100 and now it's at 200. Duh. Anyway, so what that shows is Amazon. I picked Amazon because if this year the markets continue falling and Amazon continues falling, then how the hell are we going to make money in the markets? And I just happened to pick Amazon. It could have been sterling, US dollar, could have been anything. And you get some good trends. And we didn't ever get in at the top or bottom of a trend. Okay, and some go wrong. That one was lost money. That one lost money. We didn't get in at the bottom. That was a short. Okay, so short means to sell high, buy low, buy. You don't have to take all of these signals. You might miss some, like this one. I think most people would have missed. We didn't get that one because by the time we looked at it, it was already up. Okay, fine, we missed that one. Short. That one didn't make anything. That one didn't make anything. And this one's still pretty flat. Oh, okay, Alpesh. There's quite a few, say 50% winning, 50% losing. Yeah, but the wins are the ones where you made more. So any strategy, and the strategy we're coming to now, has to be such that losses are small in size, short in duration. Small in size because we know where the stop loss is, but short in duration. You can't be holding something for ages and like it's still losing money. All right. Now, let's talk those two parts. That's my mentor, one of my mentors, Bill Lipschutz, Global Head of Foreign Exchange. He was in my book when I wanted to be a trader. And like I said, the FT published it. His chairman at Salomons was Warren Buffett. Bill was Global Head of Foreign Exchange Trading at Salomons. Okay, so the world's largest trader, basically. And this is what he taught me. He said, look, I was a student at the time. You're a student. You better just focus on trend following because it's the easiest thing to do. Now, I know why you're all here. I don't know SpreadX, by the way. I don't have any affiliation with them, association with them, or anything. But this was a piece of data that I found. I'm sure every other broker has the same kind of data on brokers like this. And I know you're thinking, oh, £100,000, their top traders make £100,000. I want a bit of that. No, we're still sticking to 500 a month. Because if you can make 500, we need to develop your skills. I'm here to actually not make you money. I'm here to make you skilled at making money. All right, there's a difference. Now, that's what we're going to do. 15 minutes a day, you're going, or 1 hour a week, you're going to scan 12 to 20 instruments. And I've given you a list to get you going of the instruments we're looking at the moment. One screen, one trade a day minimum, 20 trades per month. That's it. That's it. I don't want you over trading. Don't want you doing low quality trades. So let's look now at the entry. Okay, where do we enter? recap everything, and the business plan. Can that make money? So let's go to the business plan. My mum, honorable visit on every webinar. I don't know why the king is bowing to me. Business plan. Is it all worth it? Is it worth it? The reason that picture's there is, for me, yes, it is bloody well worth it. It is worth it. Okay, but that's just me. So is it worth it? And then we'll look at the entry, which is the most important part left of the webinar, and then Q&A and recap. All right. Now, trading is like driving. That's the analogy Bill gave. I love the analogy because in driving, just like in trading, you know, in trading, you've got stop losses, entries, take profits, all of that. And you think, am I ever going to learn this? I'm not sure. Is it worth the effort to make lots of money sitting at home in the warm comfort of my own office without having a boss? Of course, it's bloody worth it. Driving, similar thing. Driving wheel, accelerator, brake, clutch, if you've got an old car, indicators, rear view mirrors, side view mirrors. There's just a lot of stuff to master, yet we all do it. And trading, like driving, gives you freedom and fulfillment. That's why it's worth it. All right, it's worth it. That's the analogy. And that's why we're going to start small, just like with driving. And if you want to know how long it takes you to master trading, the best rule of thumb I've ever come across is this. How long did it take you to master, to get past your driving test? Okay, how long did it take you? That gives you a rule of thumb of how quickly you as an individual develop new skills. Now, it's a very rough and ready method. It's not scientific. It's probably as good as any. Some of you still haven't mastered trading and driving, and you're on your 50th driving test. Walk away from learning any skills, I suspect. Don't chew gum and talk for a start. So Bill said to me, let's do a business plan, Alpesh. Remember, I was at university at the time when I met him for the book because I wanted to leave what was originally a career as a barrister. I wanted to leave that to trade full time. So I said to Bill and David Kite and John Najarian, who you see on CNBC all the time, and Bernard Opperty, who runs a multi-billion-dollar hedge fund. I said to them all, guys, how do I do this? Should I do this? So Bill said, let's do a business plan to decide whether or not you should. So this is your 2023 entrepreneur business plan. This is your 2023. Am I going to beat cost of living and inflation through trading or not? Business plan. Okay, this is it. So get your pen and paper and get your phones ready, because this might set you up for the whole year. And if it does, as it has some of my students in previous years, I'll video record you and we'll do a testimonial video. And thank you very much. And please donate to my favorite charity, which is the Lombard Trust. We look after widows and orphans. Max loss, 1% of total capital, he told me. Actually, it's less than that when you're a professional, but we'll start off with that number. And I said, well, what does that mean, Bill? I said, I'm a poor student. I've got no capital. He said, well, I know you're a student now, Alpesh, but one day you won't be. Especially if you're consistently profitable trading, you'll find ways of getting capital. So let's assume, because it's a business plan of where we want to go to, you've got £20,000. And I said, I don't have £20,000. I didn't when I was a student. I was hand to mouth. Okay. I was trading a little bit, investing and using the profits to pay for, you know, what you pay for as a student. Food, rent, heating. Total capital, £20,000. Okay, let's just assume that. All right. So your max loss per trade would be £200. Entry to stop loss, you do the position size such that you don't lose more than £200. Well, that's way too much, because you're not going to have £20,000 to trade with on day one anyway. You're going to start with a demo account. But let's just assume you've got to your pinnacle stage, which is £20,000 for trading. Not 100,000, not 10,000. That's your pinnacle, right? Might happen in a year, might happen in two. Let's say your win-loss ratio is you win a bit more than a coin, right? You're a little bit better than a coin because of the strategy we're going to talk about next, the entry point, or the last part of the strategy, the entry point. So you win a bit better than a coin, all right? Which is good. So you win 60 trades out of 100. Your average loss is therefore £200, like I said, when you lose. Average win, because we're adding to winners. Remember, we want a strategy where we're adding to winners. Winners add to winners. We make more when we win than we lose, obviously, because that's the way we've constructed the strategy. Let's say you did 100 trades. So Bill went through this. He said, let's say you did 100 trades, Alpesh. This is way too simple, and I'm going to tone this down in a second, like all business plans, on the back of a fag packet or on a napkin. Oversimplistic, and we'll tone it down. Don't worry. So imagine you're sitting here now. It's 2023 is coming upon you. You're sitting maybe with a business partner. It might be a spouse or a child or whatever, and you're thinking, should we do this? This is it. This is the opportunity we're looking at. So I said to Bill, and this is what happened to me when I was at university. I said, whoa, Bill, 60 times £300, that's profits of £18,000. I'm off to the races. I don't know if I danced like a dad back then, but I got overexcited. I said, look, tell my parents I want to leave university. It's all I want to do. He sat me down and he said, hang on, what about the losses? Well, yeah, but that's £8,000 in losses. That's still £10,000 per 100 trades. I'll get the 20 grand, Bill. I'll get the 20 grand. And he said, well, hang on. at this point, I got immensely carried away, which is what you're going to get in a second. So I said to him, I'm going to be a day trader, because that was all the rage 20 odd years ago. I'm going to be a day trader. I'll do 100 trades per week, 50 weeks in a year. That's 5,000 trades per annum. Well, there's 52 weeks in a year, but still 5,000 trades per annum at £10,000 per 100 trades. I'll make £500,000, Bill. Whoa, I'm going to be rich, you know. And I was really genuinely excited. You can imagine the euphoria. You got no cash as a student and you think your life's just sorted, and you're talking to the world's largest Forex trader. I mean, you know, you're talking to somebody who's stupendously rich, whose business is to make lots of money. Of course, you think you've arrived. I know what you're all thinking, and you should. What drugs were you on, Alpesh? No. What you're all thinking is, Alpesh, don't be stupid. We're not going to do 90% of that, 2/3 of that. We're not even going to do a half, a quarter, a third, a fifth. We're not going to do 15% of that. Let's say we did 10% of that, 50,000. That's still optimistic. Even 10% of this business plan is optimistic. Remember, our goal was 500 to 1,000 per month. So I'm liking the business plan because it's over optimistic and I can get 10%. Forget it. No. What Bill said is, you're not even going to do that. You're being over optimistic. You're going to keep your day job. You're going to continue doing what you're doing, whatever that is. And you're going to do 100 trades every 6 months. Do you know what that is? 5 a week, 1 a day, 1 a day, 200 trades per annum. And the reason he said keep your day job is because he knew I still had the bloody skills to learn. You can't just leave university, drop everything. He didn't want to call up my parents and say, I'm ditching everything. This is what I'm going to do this year, obviously. And it's the same for all of you. But also, he said, while you're learning the skill, it's a lot better to have plan B and whatever in your pocket. Anyway, 100 trades per 6 months, 200 trades per annum. Well, that works out £20,000 per annum. So it's not 10% of the business plan, it's 4% of the business plan. Too optimistic, even 4% of the business plan. Remember, we're trying to go for 1,000 per month. So even that was optimistic. And I said, that's brilliant. That's a good business plan. He said, exactly. If you're getting even about 2% of your business plan and that still hits your target, then you're not relying on luck and over optimism. So I liked it. Now, at that point, I asked him a question, which you should all be asking me. Hang on, Alpesh, if these numbers are true, then how come everybody isn't rich? Which is what I asked him. I said, hang on, how come everybody isn't rich? And he gave me the answer. Bad teachers, bad mentors, by which he meant they haven't met me yet, i.e. him, okay, and bad strategies. So let's, in the final part of the webinar, before we do the Q&A and the recap, go through the last part of the strategy, which is the entry, okay? 100 trades per annum, that's my mum again, there we go. 200 trades per annum, £20,000. No, you weren't listening. It's 1K or 500 to 1K per month. That's our goal, okay? Okay, tone it down. Tone it down. There's another reason to tone it down. You're learning a new skill. You do not want to take your car on the motorway and blow it up. Similarly, you don't want to start with over-ambitious goals, therefore having to trade larger amounts, and therefore, whilst learning a new skill, just blow up and lose lots of money. That's why we're toning it down as well. So, entries. That's the last part of the webinar, the most important part. How do we do it? This is the entry. We are that guy. We're momentum trading, we're trend following. We are that guy. That's what entries means. So in the case of GBP Japanese yen, okay, there. The entry became because the trend was moving low. Well, wait a minute, Alpesh, the trend was, yeah, we got a signal there as well, but the trend was starting to go high. But actually, you couldn't see the trend there, Alpesh. Hang on. It was just going sideways. How was there a trend? Why was there a signal there? Okay, so let's look at that. And you can do it manually. Now, we have 10 strategies in our hedge fund. The oldest one is the one I'm going to show you. It's the first one. It's the one Bill taught me. And I've finessed it a little bit since then. But it's what the education I got from people like him and all the momentum trades. And the reason they said this is this. You are not, in any kind of trading, you are not going to be Goldman Sachs or whoever. You're not going to move the market. Equally, you never want to be the biggest mistake every retail client makes, which is try and step in front of the market and guess which way it's going to walk. Okay, you don't have the analysts, you don't have the brain power. Neither do I, right? You're not doing that. You want to be the guy behind, as Winton Capital showed, who follows the trend, who rides the coattail. Why? It's a hell of a lot easier making money that way. A hell of a lot easier than trying to think, oh, yeah, I think in 2023, this is going to happen. Did you foresee COVID? I didn't. Did you foresee the financial crisis of 2008? I didn't. No, I'd rather be the trend follower than the trend setter. Simple as that. I don't have the capital. to set the trend, right? So how do we do that? So Bill said to me, well, look, you got to measure if it's momentum trading and when to buy low and sell high, or sell high and buy low. You've got to measure, by the way, sterling US dollar, I'm going to mention because this is what sort of saved our bacon this year in many ways, because stocks certainly didn't help us with the market, and a few energy stocks, but most of the time we were in cash. Short, long, great, thank you very much. It's currently short at the moment, a bit of weakness, right? And I think there's probably going to end up being buying opportunities at some point in that. But that's the daily chart. I just wanted to give more perspective on that because that's the Liz Truss era. Thank you, Liz. You made hedge fund managers very, very rich this year. And I've spoken to a few of them. And when their results come in, it'll be because of sterling US dollar. Kwasi and Liz made hedge fund managers stupendously rich this year because that was a no-brainer trade. If you follow my LinkedIn, you'll see it. Anyway, so how do you find those momentum when it's going to that you're riding that trend? So Bill said, well, you measure how close the price is closing to the high. And I said, what does that mean? He goes, like that. If the price closes near the high, it's a bit like those auctions. I've got 50, anybody give me 60. I've got 60, anybody give me 70. I've got 70, anybody give me 80. I said, well, why? He goes, well, if it's got momentum, there's an increased probability, not a certainty, that in the next period it will move higher, and therefore it's worth entering the trade. And I said, well, hang on. There's multiple ways of doing that. You could do lower highs, higher highs, or is the price closing near the high? And he said, yes. What you want to do, and the reason we did it this way is because I remember I was a poor student. I couldn't afford Bloomberg terminals and clever analysis. So we had to keep a simple strategy. People like that, like Bill, are very good at being able to teach. You know, they're so on top of their game. They can teach anybody anything in their game, okay? And so he made this suitable for me, and it's still one of the 10 strategies we use. By the way, me disclosing this to you, we disclose this to our clients, isn't going to, well, if you can find a way of making my hedge fund go bankrupt because you know one of our 10 strategies, I'd like to know how you're going to do that. Do let me know. Okay, so what he said we're going to do is we're going to do the 3 things that all hedge funds do and all private investors should do but don't. We're not just going to look at one indication, is the price closing near the high? We're going to look at multiple indications. So we've got corroborative evidence and the odds are in our favor of the price moving up. So we're going to look at higher highs and higher lows. So multiple indicators. Now, different hedge funds have different rules. They'll look at different things. I don't know what their recipe for Coca-Cola is or Pepsi is. Okay. But I'm just saying this is our way of looking for trends. They'll have different things where they look for trends. I don't know. They might look at the cycles of the moon when they think that the trends are going to happen. But what they all do is they don't just look for one piece of information or one piece of evidence or one indicator. They look at multiple indicators all suggesting the same thing. So they remove a lot of bad trades. They might remove some good trades they could have taken, but more importantly, they remove all the bad, big losing ones as well. Not all of them, but a lot of them. Okay, so multiple indicators, he told me. So where am I going to get these indicators? We'll come to that. The second thing we're going to have to do is look at multiple time frames. So my favorite time frames, write this down, 15-minute, 30-minute bars, 1 hour bars. And you might say, how can I do 1 hour bars with a day job? Yes, you can, because the trends will hold for about 1 to 2 days, or actually longer sometimes, right? So 15-minute, 30-minute, 1 hour. If you're trading the 30-minute bars, you look at the 1 hour to make sure that the multiple indicators all indicating that the trend's in place. How do you know they're indicating that? I'll show you that in the next slide. And 3 is PC, and I'll come to that in a second. So he said, look, you're a poor student. You're going to have to use the indicators which are out there, but don't use them the way the textbooks do, because if textbooks were right, then we'd all be rich, wouldn't we? He said, what you're going to do is you're going to look at these multiple indicators which show whether the price is making higher lows and higher highs and closing near the high, and make sure all those in multiple time frames are ticked. You tick the box. Well, what does ticking the bloody box mean? And he explained it. He said, make sure that those indicators are flat to just starting to rise. I'll call that flat to rising. Flat to just starting to rise. That means some of the lagging ones, like an MACD, none of these work all the time. That's why you have to use multiple indicators, because none of them work all the time. So if all 3 of them are showing the same thing, there should be a slight odd in your favor, is his argument. And he was right. Slight odds, just slight, which is why you have to do all the other things like money management and everything else. If it was always going to be right, well, you wouldn't have to do anything. You just put all your money into one trade. So flat to rising, multiple indicators, and the next time frame along. Are they also doing it in the next time frame along as well? And finally, PC, price confirmation. In other words, did the price, write this down. If you don't do PC, you're not making money. Price confirmation. Did the price make a 2-period high? If you're trading 15-minute bars, 2-period high. 1-hour bars, 2-period high. Why? Well, because for all the cleverness of all the indicators, flat to rising, multiple indicators, stochastic, RSI, MACD, whatever indicators you're using for momentum, flat to rising, okay, if Goldman Sachs don't actually kick off the trend and put money into it and make a 2-period high, then guess what? It didn't move. It didn't happen. That's why you need the 2-period high. I want you to show you JP Morgan, which has been one of the more successful. I mean, the banks are all over the place, but still. The short, put that to one side. The long. What was happening over here, which we couldn't see with the human eye, was multiple indicators, multiple time frames, flat to rising. Now, we didn't get it at the bottom, and that's fine, because we got that and then all of this going up. Okay, we got that and then all of that going up. And we use flat to rising, so not like the textbooks, multiple indicators, multiple time frames, and price confirmation. If we don't get the price confirmation at a 2-period high, then we're hanging around. We're waiting. It's not going to happen. We won't get the confirmation. That's what's most important. Pretty straightforward then. S for stops, entries, limit orders, money management, business plan, all the rest of it. This was a talk I gave at Bloomberg a couple of years ago, pre-COVID, obviously. Trading is something which you can teach anybody. It's like driving. The same people who can learn to drive can learn to trade. Those are the people who are in the audience. We know because we asked them. Okay, I don't know if we had many full-time plumbers, so I'm not sure if I should have put a plural, but we at least had one plumber. We certainly had more than one teacher. That was true. And of course, some were professionals. Okay, I perfected this, like I said, when I was at university. It's when I met Bill. Perfected the strategy. I've won awards. That's me on the front cover of the Financial Times. Then the Financial Times said, look, you know what you're doing. You've won our competition. Would you want to write a book? And I said, yeah. I mean, you know, it'll help me raise a profile and I can raise capital. That's the first time it occurred to me to set up a hedge fund and not just trade on my own. That's me winning the competition in the Financial Times. Okay. Neil Woodford, the idiot, came 14th. He beat Jasper the Cat by a narrow margin. Muppet, but everybody gave him billions. Chiseled jaw, apparently. What did it take? Now, that's the hedge fund side of stuff. I'll show you how to download that if you don't want to do it manually in just 1 second. Well, Merrill Lynch HSBC launched their collaboration. I licensed what I've just said to you to them and a few others. It cost about $1 million to set up a hedge fund. I used the money to set up the fund. That's me at Linen Hall under my first fund, and me writing in the FT about it as well in my column. All of that helped raise a profile, which then allowed me to set up the fund. Without a profile, you can't do it. It helps when you've got Merrill Lynch HSBC behind your head to be able to raise capital and you're writing in the FT. But that's different. That's about raising capital. The best time frame to trade, 1-hour bars we found. Doesn't mean the others are bad. We gave our students, the people new into the fund, to trade this time frame. They could pick any instruments. They did about 25 trades a month. Some months 40, some months 17, depending on the signals. Net pips captured 2,250. But big caveat: some months it might be as high as 4,000 pips net. That means profitable minus loss making. Some it might be zero. In other words, the months you make more makes up for the months you make less, and so we try and average out at £500 a month. Okay, best winning streak, 70 wins out of 100. Worst winning streak, 30 out of 100. Doesn't matter. It's this number that matters. But that is volatile. Now, let's say you did $2 a point, way too large, or £2 a point, way too large. Anybody tells you to do that, they're getting kickbacks from brokers. Okay, but let's say you did it for a second. Well, $2 times 2,250 net pips captured on the 1-hour time frame and 75 trades in a year would mean you made $4,500. You made $4,500 in the month. Hang on. We said our goal was $500 a month, 10% of that, which is how we knew we didn't need to do $2. We could do 20 cents, and some brokers allow you to do 20 cents. We could do 20 cents a point, 20 cents a point, and that's a lot better. And that's when we knew we had the Google of trading, something mass market. So then I had people, particularly one individual who's responsible for all of this technology from Barclays Bank called Biku Alawalia. And he said to me, teach me about trading. I want to trade. I want to leave the bank and so on. And he has now left the bank and he lives in Dubai. He was here last week and he became my best friend. And I said, no, I haven't got time to do all of that. And he said, well, why don't you take the technology and spin it out? And that way you've got, like Jeff Bezos did, an Amazon, not just a hedge fund, which might hopefully have $1 billion of assets under management one day, but you've got a tech company. And he said Barclays would help raise the capital and IPO it. He's now left Barclays, the bugger, because I taught him how to do all this, and then he's trading. Anyway, it doesn't matter. He's still my best friend. And I said, well, we'll want to do this. People will not want to pay any subscriptions, not for data. No, I don't want anything with subscription. I said, I don't want something where the principles I tell them go against what I'm then saying to them. So I don't want to charge them, £2,000 for a bloody weekend for their trading room, trading school, trading college, trading university, trading academy. I mean, why do people use educational? And I know what a university is. I've been to one, but sticking trading in front of it doesn't make it better. Convenient, compatible with work, no hotel costs or travel costs, live trading practice where I can look over their shoulder and they can look over mine because they can see every day what we're looking at and where signals we're waiting for. And I can look over theirs and do that. And I said, well, if I get 1,000 of those profitable, these are the numbers we worked on, 1,000 of those people profitable, then we can go to venture capitalists at a valuation of, I don't know, 30 million. It's a multi-trillion-dollar industry is trading, and you've got a global audience. So that was what we did. We built that out as well. No subscriptions, no daily, weekly, monthly subscription. We called it Project Predator. That was his idea as well. Buy when the price goes above the horizontal line, because that confirms this price momentum. Odds of a profitable move have increased. The green arrow alerts you and can send alerts to your phone, but we'd rather it didn't. We'd rather you looked at it for 15 minutes before and after work. Remember, this is just doing automated what you could do manually if you want. We used to do it manually, but we then just automated it all as well. I'll show you how to download if you wish. One second. So when you got something like that, you get the alert, you go long, and it's also telling you if you want to lose £100, you might not. You might say, no, I don't want to do that. Then that'd be £6.50 a pip. And you say, I want to lose £10. Fine, 64 pence a pip. And it also tells you where to add to your winners there and where the stop loss is. So you can tell the broker all of those numbers instantly without having to manually calculate it. As I said, we used to do it manually. You can do it manually if you wish. The big questions then arise. Okay, the big questions arise then. Well, wait a minute. Can it make money? Is it easy? Well, I don't think it's easy. You just follow a manual we give you. We train our own staff in the hedge fund with this. This is how also the idea came out. Because when he said to me, can you train me up in this? And I said, no, I haven't got time to do it. He said, well, wait a minute. It's just the same stuff you're training your new staff. I thought, oh, actually, yeah, you're right. And we think it's a technology business, which once it IPOs will be worth gazillions. But then that's my problem. Does it make life easier? Yes, because you're not having to do things manually. Are there checklists? We'll give you the same rules we give. This was some of our first students. So full disclosure, not me. This was one of our first students. It might actually have been one of Biku's ones, actually. I think it is. 5-minute bars. I don't recommend 5 minute, but they do what they want to do and then they send it to us. This was version 1. We're now on version 4, so this looks a bit dated. And the reason he's doing $30 a pip is not because he was rich. It's because that's where you get to. You start off small, well, demo account. Then as you build up your profits, only then are you permitted to increase your trade size. So you're always only trading with one money or profitable money, not your original capital. So you're not risking what you started off with. Any broker, it's broker independent. You can take your signals off an MT4 and just trade with whichever broker you want. Might be Interactive Brokers. It might be Intertrader. It might be whatever. There's a lot of brokers we'll go through in a second. Okay. Sandeep, yes, absolutely. Just drop me an email. No, nothing at all. Valita said driving's easier. It is not, my friend. Driving is a lot harder. You could kill people on the roads. Look at how many people die from driving. It's okay. This is a lot easier and safer. Who's behind it? Well, one of the biggest endorsements we got, and it's on the cover of the book, is this: gets to the harder matter of trading by clearly elucidating the methodologies of successful trading strategies. Methodologies of successful trading strategies. Chairman of the Chicago Board of Trade. That's in print. That's not like Mrs. Smith. You see on the internet these people who get actors to say, hey, Greg's just amazing, or whatever. Darren's just the greatest thing. Yeah, those actors and fakes who do all that. That's absolute nonsense. That's an endorsement when it's people like that. We've got a whole load of those, okay, from professional traders like the chairman of the Chicago Board of Trade. Without an indicator, that's what it's like. This is one of the reasons we wanted to do this and spun it out of the hedge fund. Our idea was, well, in a hedge fund, we're investing in companies. Well, why not invest in our own and spin it out? What our ambition is to get to 1,000 apprentices, 1,000 students of mine in batches of 25. You're in it for life. There's no daily, monthly, weekly costs at all. All upgrades are free for life. There's even course material, a manual. There's calls to me unlimited. Why unlimited? Well, guess what? If you're profitable, what we discovered is you won't need to keep calling me. That's why we're the only people anywhere on the planet who says you can have unlimited calls. Because when people are profitable, they don't need to keep calling you. They just get on with it. And we that was the sort of insurance policy to signal to people, we can make you profitable and we're that confident. That is how confident we are. We also let you, the other thing is we give you signed copies of 2 of my most recent books to keep, signed physical copies, earphones, a trading journal, all of this as well. Why do we do that? Just because we want to build up to 1,000 people in batches of 25 going through it. And you can trial it if you wish for 7 days, 14, 21, no, for 30 days. It's yours for life. After that, if you want to stay on, and you get to keep the books and everything else. Why are we actually paying you to use it? Well, because we're about 850, 875 in batches of 25 who've gone through it, who've got it, who are on board. And there's also a 12-week course. It's yours for life. It's updated regularly. For those who want to get into the hedge fund industry, really get to know the nitty gritty. But the bare minimum, download the software and the manual. We want to get to 1,000 of those users and then go to venture capitalists at probably a valuation of 30 million. Given that we're going to get a valuation of 30 to 50 million, I think that's my problem, not yours. I have no problems giving you the books to keep and for trialing it. That's Bhikkhu from Barclays. He left school at 16. Okay, he's not a genius. I love the pipspredator and I spend most of my time trading and love that as a novice. Now, Vladisław said it's easier to drive. It is not easier to drive than to look at a signal and say, I will click sell. That's a red arrow, which means to sell. You click the sell button. That's a red arrow, which means to say click the sell button. That's a green arrow. That means buy. You click the buy button. That's a hell of a lot simpler than learning to drive. The amount of money you put in, you work that out at the start off with a demo account. Simple. Done. Reason I limit it to 25 at a time is because it is me who will be mentoring you. Why is it me mentoring you? Well, when Steve Jobs launched the iPhone, he's the one who goes on stage. I just copy what the billionaires do because it always seems to work. Why take apprentices? Alan Sugar, billionaire, takes apprentices. It's a great way of getting the word out. The apprentices get profitable. They tell 100 other people. It's as simple as that. What I want the apprentices to have, and subject to lawyers, is access to, free shares in the company for when we IPO. But I've got to speak to the lawyers on that, and I don't think it'll be a problem. First come, first serve. That's the link. First come, first serve. So if you've liked the idea of trading as a business, as an entrepreneur, use January. You got 30-day money-back guarantee. Use January to see if it's for you or not. Or at the end of it, you might say, and 10% say, trading's not for me. And that's fine. 90% say, yeah, I know I can make that back in the next week, month, year, in my lifetime. If you can make it back in your lifetime, then logically it makes sense to do it. I love and I'm passionate about trading as a business. I think it is the best side business there is. When we created this, the reason we created it, and I'll show you that link in a second when you go on there. The reason we created it is, you can instantly download the indicator and the manual and get access to me and my team. They can install it for you if it takes you more than 10 minutes, step-by-step instructions. Also, you've got the signed copies of the books from me. You've also got the 12-week course and the 30-day course, which are updated and they're yours for life. Every Saturday, there's 6 live webinars from 11 a.m. till 4 p.m. on stop losses at 11, entries at 12, limit orders at 1, money management at 2, trading psychology at 3, and adding to winners at 4. And if you miss them, they're recorded. So there's lots of ways of accessing me. I'm also doing monthly meetings now. My next one is 18th of January for pipspredator clients. I also always say to them, connect with me on LinkedIn as well. Only if you're clients, only if you're apprentices. Apprentices only. Otherwise, everyone else can just follow me on LinkedIn. That's what alpeshpatel.com/here is. Our ambitions are, like I said, to create a $1 billion company. Either the hedge fund's going to get to $1 billion of assets under management, or I think it'll take 10 years, or the software will, or hopefully both will, because that's what it's about. Yes, it works on PC and Mac. That's a common question. That's why I've written it there. There's no ongoing costs. All upgrades are free. We're on version 4. There's no ongoing cost, lifetime mentoring, full online training, and you get a certificate as well if you wish it. Sorry, the reason it says hurry and really big writing, Bhikkhu taught me this. He said, look, if you want people to take action, you get a big arrow, big letters, right in their face. There's VAT only if you're in the UK, and there's installments. You can pay into installments as well. You click that, and boom, you can even do that. There's VAT only if you're in the UK, or you can do it in one payment. And there's WhatsApp we speak via, Zoom calls we do one-to-one. We look over your shoulder, you look over ours to see stuff. And not just that, but you get to keep the books, signed copies of the books as well. And as I said, do join and connect on the LinkedIn as well. So all my students, the mentoring that I do for my students is not just on trading. Some of them want to set up their own businesses. I'll mentor them. I'll open up my networks to them. I've got massive networks. I have no problems. I think mentoring should be 360 degrees. So some people get this for their kids and say, oh, they want a career in finance. Will you mentor them? They can learn through this. I say, yeah, no problem. The whole point of it is that if you're going to mentor somebody on trading, you should actually be mentoring them on everything to do with their lives as well, not just trading alone, okay? So you can see there's some 17,000 followers there alone and lots of connections as well, including from banks and whatever else and all the rest of it. So what you get, and what I think is different to anything out there, is no ongoing charges and access to all the networks. I wanted to make it absolutely no-brainer. I want to be in one of those two lists. Simple as that. Why? Well, it's something to do in a lifetime, isn't it? To get into one of those two lists. And you might think, well, that's a bit stupid. Like I said, that's one of the biggest, best endorsements we've got behind it. And that's one of the reasons why I do it. Sanjay, will you get shares? Yeah, exactly, Sanjay. You've just repeated what I said. That's the idea. And those shares should be free. Vladislav, fine. Good luck with the car. Yes, Sandeep, absolutely. Drop me an email as well. Protect against prices gapping. Yes, so there's several ways to protect against the gapping of. Oh, we've got quite a few coming in now. Put it in the chat box as you put it in, so the team can let me know. So we have got Ricky, yours has gone in. Julie, yours has gone in. Roe, R-O-E. Thank you very much. You signed up. I'm excited as well. Good for 2023. I'm excited as well. Thank you very much. Whoops. What did I do? There we go. I'll put that link up in a second. I want to show you, just go back to that for a second. As well, I'll give you a shout out. No, there is really no ongoing charges, and it's a no quibble money back guarantee. You don't need to send me trades. You might not do anything. Sometimes we get people who say, oh, I discovered that I'm going to be really busy this month. Can I start in 3 months' time? And we say, yeah, you can start whenever you want. You're going to have access to me weekly, daily, as often as you want as well. Yes, one other little thing. I'm going to let you into a little secret. When I'm on the BBC and talking about oil and prices and everything else, and that's one of the, I look at the indicator first and then decide whether we're long or short on whatever we're doing. And that's how we do it. Oh, by the way, FTSE, yes, indeed. I didn't cover the FTSE. Sorry, that's where we are. We're short on the FTSE at the moment. So let me tell you how the FTSE's gone so far this month. Okay, we had a short, then a long. Okay, you can see the long there, then a short. A long which didn't work out, a short which didn't really work out, then a long which has worked out well, and then we're short at the moment. And I suspect it's going to be that kind of year. If you buy and hold, you end up with nothing. If you're trading it, you're going to capture some of the waves. And at the moment, the FTSE's been pretty easy to capture. What we're looking at, yes, no, as soon as you download it, Jeremy, as soon as you download it, we can start this afternoon. I started with some of my apprentices afternoon as well. Brokers, Chandra, they've got to be FCA regulated, and make sure that. So you'll see that at the bottom of their homepage. Are they FCA regulated? For instance, I'll give you an example. Intertrader I've done quite a bit with, and they do straight through processing, so they don't charge they don't widen the spreads. Have a look at them, for instance, as an example. And also you want ones where they're not, where under 70% are losing money as well. You can check that on their website as well on there. Okay, so that's going to be the FTSE, I think, for most of this year. It's going to end up like that, and it's going to be the traders. It's going to be a traders market, basically. This is where we are on the S&P 500. The Americans have pushed it a bit lower. Okay, and how do you manage the psychology of it all? Well, guess what? You get a signal to worry about it. 1 minute I was short, the next I had to be long, and then I was short again. Does that mean I'm schizophrenic? No, it just meant that we allowed the momentum and the trends to do it, because that's where the money's moving the markets. Okay. That's how we did it. So that's me when I'm on the Beeb, just so you know. That's my YouTube channel. I will use the indicator to tell me which way things are going. Okay. The 12-week calls, I'll tell you a bit about that. It's yours for life, and we update it regularly, but it's got a very structured, very structured basis on which to, so week 1, week 2, on which to learn. Now, you don't need to do the course material. That's more for people who really want to deep dive and learn some of the things that I've mentioned, like momentum. They want to see the videos from the big hedge funds on those things. Others will just read the manual, download the indicator, and start trading this afternoon. 20% start trading immediately and are profitable immediately. 20%. What about the others? Like most skills, 20% just pick it up like this. They just get it. Okay, they're naturals. They get it. And we've interviewed and reviewed some of those. It's just like with football. I put a football in front of my son, he's rubbish. Put it in front of some other kids, they just run. The other 80%, so 10% will stop within the month. Okay, out of the other 70% that you're left, they just take varying amounts of time to learn the skills. You know, some are absolutely new to trading. Somebody like my wife would take longer, obviously. Then they're not going to start straight away and be, because they don't even know what a point is, or they've never had a brokerage account, for instance, and so on. So they need a demo account and they need hand-holding through that. Others are more experienced. They, they're like whipping through all of this and they're going, yeah, get it, job done, simple. Amazon, on the 30-minute bars, we have a long position on at the moment. See how long that lasts. Okay, that's all green, which can only go one way, which is one of those turns red. So it might well be peaking, but we're still long on that for the moment. Okay, on Amazon. Bitcoin. Yeah, listen, at the moment, I would not be trading Ethereum and Bitcoin. I've got them up here, but the reason I want to show you them is this. They've just been going sideways a lot. So we had a short, which made a little bit. The long didn't do anything. It just kept a lot of time and went sideways. And yes, this short has done a bit. I mean, okay, if I was really doing Bitcoin, somebody said do it, I'd probably be looking at I don't want to say just the short ones, because then you get a big whiplash to the other side. I don't know. It just seems this really put me off at the moment for Ethereum. So I've put it up here to show you, because a lot of people said beforehand when they filled in the form, can you also cover that kind of stuff? But on the whole, not particularly excited. You can see it with Ethereum. Look, it's just sideways for ages. And that was a short, which didn't really make tons, did it? I want something to move really quickly. So at the moment, with some of the cryptos, well, they'll come back again, maybe in January, week 4, and so on. Shout out as you sign up, please. So I'll give you a shout out as well. Pranav, yours has gone through. I know, Pranav. Ian, which trade did you recommend? Which trader did you recommend looking at? Sorry, Ian, could you expand on that? I don't understand. Which trader did I recommend? I don't understand. How do I avoid VAT on the purchase? It's being added even though I'm outside the UK. Puriak, where are you? It should work it out immediately. Otherwise, I can send you a link after the webinar without the VAT, but my accountants will need your outside of UK address, please. So we can do that. Alternatively, just use a different browser, but I can send you the link straight afterwards. I'll hold a place for you to make sure they don't go, because usually they all go. Chandra, brokers, I think I answered that earlier. Peter, can I contract to buy now and arrange the money in the next few days? I can deposit. Yeah, Peter, that's fine. I will hold one for you. That's perfectly fine. Just let me know. Broker. Ian said, which broker do you recommend? So brokers, 2 things I need on all brokers. FCA regulated. It'll tell you at the bottom of their homepage. Secondly, at the top, make sure it says that less than 70% lose money. So 69% is fine. And Intertrader is good. I think ETX I've recommended in the past, FXCM I've recommended in the past, but check these right now up to date as well. And we update on here. We do update the brokerage stuff regularly. So I'll make sure we update that as well on there. Which are the latest brokers? I'll just get one of my interns to go through it and just give me a list of sort of the top 20 and which ones are regulated and giving those numbers. But I, in the past, have liked Intertrader. I know they're honest. I know the team as well, and they do straight through processing. Interactive Broker are good as well. Don't have an issue with them as well. So like I said, week 8, look, how to deal with spikes, mentoring class, Selma, Citibank on trend following strategies like ours. So all of this I put together for my internal hedge fund team. So when I was training my staff, I put this together because obviously, like any firm, you've got to have staff training materials. Okay, so when we put this together, what we discovered is that as we went through it, I have to refresh the screen on that one. I'll refresh the connection on the, there we go. So there you go. Okay. We discovered that actually this is material other people might be interested in, which was basically trend models. Do they work? Can simple trend following strategies work? And this is from Citigroup. So we share that. You don't need to learn that. That's the whole point of the 12-week course. You don't need to learn all of that unless you want to be a fund manager. But that's the beauty of what we're offering, is it's a hell of a lot more detail than people realize. Dean, what are your views on bot trading? Don't like it, because what you're ultimately saying is that a bot can find in all market circumstances. The one thing we're still teaching you is we computerize and automate as much as possible. But the one thing we're going to be teaching you is trade selection, because the human brain can find trade selection better than any bot can. And how do we do trade selection? What do we teach you? That's Shell, by the way. Still dropping. Thank you very much. Making money. What it can teach you is, okay, where are the smoother trends, right? Which by eye look roughly smoother, and get the algorithm to operate on those. That's the point. Get the algorithm to operate on those. I see the FTSE's dropping a fair bit. I don't know what the news is on that. I don't know why it's dropping further. Might be because the Americans are dropping further and their futures are dropping. Okay, whatever it is, I don't need to know the news. Do you see? Practically in real terms, you can see. You can also see why we add to winners, because we took the profits that we made here. Let's say it was £100 for argument's sake. We doubled down, and guess what? Now that became 2 positions short on the FTSE, risked some of the initial capital in order to make more. What if it didn't work out? Well, then we would have broken even or lost a tiny bit. But was it worth it? Yes, because the 20% of the time you get the bigger trends like this, you make a bit of a killing, okay, relative to the capital you've put in. Right, that's why it's worth it. And yes, it takes about 15 minutes, John T, to install, and then we once you've installed it, we will 15 minutes to install, and then we'll just take it from there. Okay, we'll teach you everything you need. There were we used 10 strategies, Ian. This is the first and the oldest as well. If you've got another 9 hours, we can go through the other 9 as well. Peter, may have missed your answer. You spoke it is to my wife, just arrived back and needs help back now. Oh, sorry, Peter. What was the question? Oh, let me just check the question again. Sorry, Peter, could you repost the... Oh, wait a minute. Yes, sorry, you had gone away. Yes, I'll email you, Peter. I'll make sure that we save one for you, so don't worry. I'll make sure we save one for you, Peter, so it's not an issue. Okay. And there was the VAT person. How do brokers affect the percentages of winning accounts? Oh, great question. How do brokers mess you around? It's a brilliant question. So let me explain what brokers do. Brokers in the good old days, 20, 30 years ago, maybe even longer, used to be like estate agents. They just matched buyers and sellers and got a commission. Okay, so they had no skin in the game. They just matched buyers and sellers. Then they realized that if we act like the casino, the house, and we can move the prices, and we can look at the algorithm, we can see, oh, we've got a whole load of people who are long sterling. Let's just put the price or spike it in the middle of the day or put a wider spread or whatever else. We can play around to get more profits, and we'll take those losses but we'll take what they lose as our profits. So they became the house. Okay. Instead of matching buyers and sellers, they became the counterparty to the winning, to the long sterling and the short sterling people. And because it didn't unwind 50-50, they managed to make profits. And sometimes they could spike the price and move this, hit stop losses because they could see where the stops are. So that's how they started doing it. They started playing pretty dirty games. And they managed to stay one step ahead of the regulator, who hadn't got a clue what was really going on, and all the rest of it. So that's actually what started happening. And our job is to stay ahead of that. What we help with some of our apprentices is, they sometimes get problems with brokers, and we tell them, listen, don't mess with our clients. We are not happy if you do, and so on and so forth. Okay. Thank you. If there's no other questions, I'm going to leave it at that. I think, oh, no. We've got a few more people saying, sorry, I didn't scroll up. We've got a few more who've saying, Ian, yes, over 2 months. You can do it over 2 months. Where do we go? So if we go here, oh, we've got a dedicated website as well. And actually, we've got a dedicated community site where you can post questions as well. So we've got a dedicated community site on here as well, and a whole bunch of testimonials as well, video recorded testimonials at that. So you can see the videos, because, you know, I just think Mrs. X from so-and-so is a bit bloody useless, isn't it? Is that not coming up? That should come up any second. Sorry, I think I've got too much going on my computer. But anyway, we've got video testimonials where you can see client reviews and so on. Okay, on there we go. And you'll see them, it'll come up on my screen. And case studies. We've actually gone through people and discussed all of that, and, you know, what did they do, how did they use it on my programs, and you'll be able to see some of the case studies on there as well. Okay. I think it's coming off the screen there. We'll move that around and jiggle it a bit. Yes, you can do installments if you go there, and you can do it over a couple of months. So yeah, when you click on that, there'll be an option to do installment split pay. Okay, and it does it over 2 months. All right, so there's that. And we've got clients from, obviously, the most from the UK, EU, US, Australia, New Zealand, Canada, UAE, Hong Kong, South Africa, and Singapore. Those are the most represented regions of the world for us at the moment. We've also got Mexico and India, but there's just a couple from those, so I've not put their flags up as well. I'll just run through the last bit of Q&A that people often have. Because you want to know stop loss, the risk, the amount to put in, that's all done for you. So we try and do all of that extra work. So all you're left with is just purely trade selection part. And the trade selection could be, look at JP Morgan going all over the shop. Anyway, that's where we are at the moment with JP. So that was the long. It's gone up. It's higher than it's been at any other point in the webinar. So we'll see what happens. Okay. And it does the thinking as much as possible for you. Your job then is just trade selection. We even tell you which trades we're looking at for the next set of signals. Now, ideally, I want all my students, because every tutor wants this, to have a PhD in trading. I want them to go through the 12-week course, the 30-day course. They don't have to. And I'd say only 50% do. The other 50% just read the manual and trade. They say, I don't want to know all the history and the theory and all the rest of it behind it. Okay, and we think that's fine. So, yeah, you get all of that. WhatsApp access, Zoom access, Telegram access, which will show you the daily stuff, one-to-one calls, trading plans. I've got some students who will do detailed Excel spreadsheets. I've got others who will just send me some screenshots and we'll go through it. And it's, you know, we've got 24/7 live calling. We've got a Skype number. I want people to have access to me. And now in London every month, we're going to do meetups. That's new. That's new. Okay, so you've got that as well. And the whole idea is you network, use my networks on LinkedIn. That's new. So all of these things, I just want to, when you believe in a company, you want to make sure that people see it as a no-brainer. Any other questions? Why rely on backward-looking measures for volatility? If you can find me a forward-looking measure of volatility, I'd love to know it. There is no guarantee that history will repeat itself. I think that's what you're getting at. So in any stock, you're absolutely right that there is absolutely no guarantee that history will repeat itself. There's no guarantee at all. However, as long as we see that there is some kind of pattern that, for instance, when you drop a ball, it goes to the ground, we can make a forward-looking projection that it should, in all probability, when I drop the ball, still go down, drop on the ground. So that's what we're doing with all the things that we look at in price momentum and trends. You're right. Just because a trend happened before, under certain circumstances, and 100 times before or 50 times out of 100 doesn't mean it's going to happen again. So there is no guarantee. You're absolutely correct as well. Now, separate to that is, what about event risk? What if there's some big event like weekends? We know that event is coming. A weekend, we're told in our calendars, is coming. So on the whole, we tell people, try and avoid opening new positions on a Friday for obvious reasons, okay? Because you're taking a big risk over the weekend. Now, there's the other type of events like COVID, which just hits you in the face, or I don't know, the government announces a lockdown or whatever, something unexpected. We can't predict for those, neither can anybody else. So under those circumstances, when people want certainty, I would say definitely not the trading part for them. If they're looking for certainty, that would be a bank account on that, okay? John Watson, CNBC, Supna, Barclays. We've had lots of endorsements, and because we've had all these endorsements, and these are all paying clients below, they've all paid for my trading know-how to their audiences, to their retail clients. We thought this is a no-brainer. We have got to get the word out on this, and that was the point of it. So anyway, that is that. I am going to go. Oh, there's no contract in the sense that it's a one-off. There is no weekly, monthly, daily costs. All upgrades are free for life. You do not have to pay for upgrades. The long-term plan I've explained. If you need help, can you speak to someone? Yes. Where do you get the time to mentor? Well, we realized something very early on. If people are profitable, they don't need mentoring. And that's why we do it. And it's not just some lackey that we've hired to do the mentoring and pay him 20 grand a year and call him a mentor. No, it had to be me. If it wasn't me, then you can't signal to people that I'm confident you're going to be profitable. Otherwise, you're just signaling to them, yeah, I'm going to fob you off with someone. Yes, you can use it on a Mac. I do. Is there a manual? Yes, indeed. And videos as well, and new videos all the time. Why do you limit to 25? I'm doing the mentoring. Are there any other costs? None at all. In fact, we give you the free books, and the monthly meets as well are free. How are students performing? Some do incredibly well, and you can see the reviews. Others take longer time to get there. It's as simple as that. And in the interim, they have some good days and weeks, and they have some not so good days and weeks. So then you're transitioning them from the ones who instantly do it well, others who take longer. It's the bell curve, as you'd expect. You get some extremities who've made millions, and you can see the videos on. If you look at alpeshpatelreviews.com, you'll see the videos over there. Is there any capital gains tax on profits? Not if you're using spread bets. There aren't. Is the yes, the 12-week course is in there. The 12-week course, 30-day course. There's no additional extras for anything. The 12-week course, the 30-day course, the mentoring, the calls, all of it is in there, my friend. In there as well. And guess what? It gets better. We update all of that virtually every, from sometimes every day to every week. So it's always live and up to date. No, Ian, there's no capital gains tax on spread betting if you're using spread bets. And also you have a capital gains tax allowance of 12,500, is it? Or 14,000 pounds a year anyway. So you can make 14,000 pounds profits a year tax-free. So you probably won't have to worry about it in your first year in any event. We've had other students who've then created companies and traded through the companies, so that, because once they got into large amounts of money that they were making, then obviously they wanted to pay a lower rate of tax, which was 19% on the corporate tax thing. And I would say about 5% want to become full-time hedge fund managers. 5% want to. So those are all the things that are included. Somebody just asked that question. Parek, you asked that question as well. So we've got that. If there's no other questions, then I will go. I think, I'm not sure if all the licenses have gone. If you try and log in and sign up, I've kept 2 in reserve for the 2 people who had questions. One who had a VAT issue. I'll send you the direct link as well. I'll send you another link, and one other person who just wanted me to hold it for them Okay. One of the reasons why I do this between Christmas and New Year's is it's the time when people have got more time and they're more highly motivated. They've got big bills from Christmas and they've got a new year and filled with resolutions that they're thinking of making. So I find that people learn the best when they've got more time and they're motivated. I didn't think of that. That's just the way life is. And so we found this period to be particularly good in past years as well, where people have been motivated to learn. They've had a bit of time and we get on with it. And the more of you who are successful, the more valuation that comes. We have a little formula per successful person, how much it adds to the value of the company that we will ask for from the venture capitalist, and we'll shell. Like in Dragon's Den, I want, for 50% of the company, £30 million. It's going to be something like that. So we work it out what the value of each profitable person is, because you can extrapolate that to say there are, 10 million retail traders around the world. There's actually more. If you take the US alone, my God. And therefore, if you get a percentage of that global market, let alone China, doing this, even a very tiny percentage, then you get a big valuation coming up. So I should say, in future, this won't affect you guys, but in future, in 2023, the plan is to make it £4,000 and charge separately for the mentoring and for the indicator. That's not the case for you guys. You're all within the first 1,000 charter members, as it were. But the future plan is, which is why we get to those valuations for the company that we want, is that the mentoring will be 4,000, the indicator will be 4,000, and potentially larger, charge more than that as we get more and more people and more bigger. So that doesn't affect you. This is the first 1,000 we're going through. We've got about 850, it might be 825 so far on the program. Thank you, Ian. Will there be a link to Mind of a Trader? Yes, you reminded me. There we go. So all the goodies, I promise you lots of goodies. I want everybody to go away feeling absolutely phenomenally happy. Tell your friends, all the rest of it. There's the link for the free copy of Mind of a Trader to download. Okay, Dharmesh, that's where it is. Thank you very much. Thank you, Ian, as well. Thank you all for being on the webinar. Really appreciate it. I'm going to all the ones who've signed up, I think we've got about, I think we might have hit the 25 limit. Sorry, 23, because there's 2 that I'm holding. So the 20, give me 10 minutes to just... I do the onboarding myself personally. In other words, I send you a video from me directly in the email with your username and password. You'll have Judy, Paresh, Francisco. We've got a whole team to help with any issues you might have on the IT or any questions like that. And we create a WhatsApp group for each apprentice, with me, with Judy, with Francisco, with Paresh, so that you've got a community, somebody can pick up the 24/7. So you've got that hand-holding, because we need you to get to profitability. If you don't get to profitability, I don't get to be a billionaire. It's as simple as that. So I need you to bloody well get to profitability. The S&P, yes, it's falling, and that's where we are on it. Do you want me to zoom in? I will zoom in. Yeah, it's tracked back lower. That's where we are with it. That's the S&P at the moment. So given that that's at the lowest point since we started the webinar, thank you all for making me money in this webinar. I will not share the profits with you, but you can see it there. We started at a short, which was at a higher level than this. Now it's fallen further, so it's more money. Look, it's going even more. Thank you very much. Great. Oh, New Year's Eve in Paris by the looks of it, as I promised my wife. And that's the point of it. I don't need to worry. The one thing I don't want to do with trading, and I've learned, and the reason the book's called The Mind of a Trader, is I don't want to be worried about the direction of the market, what's going, and having to think about the market 24/7. And is it going to do? Is it going to do? I want to follow the trends which are there, and that is it. If you notice, I haven't talked about macroeconomics in any of this. All I've done is collect the profits from this one. Now, they won't all be doing this simultaneously, obviously, otherwise we wouldn't be cross-hedged. What'll be happening is some might be going the other way. Well, we'll wait longer for those. But at least today, I'll be able to take a bit of money out of the markets, depending on whether we close this position or not. We'll see. We've certainly doubled down on it because it's crossed the dotted line. So I'll make sure my team has doubled down on it, but they will have done. They're not rubbish. So there you go. And that's what you can see. And that's what I want you to all to be a part of. But the reason I want people to learn through the materials is trading's stupid in the sense that That's stupid. What you can see on screen is somebody literally making money as the market falls. That's not adding value to society or community. It might be adding value to your family. That's why I want you to actually have the education to learn, well, what is momentum? Why do hedge funds do this? What is trend following? Why should I risk manage? Why should I develop a strategy whereby we don't add to losers? I want you to actually respect the art. It's a bit like karate. You know, I don't just want you to know how to punch somebody in the face, but I want you to learn the history and the heritage of it, to respect the thing. It is my profession after all. So that's why I do the course material. And I know people sometimes say, no, just give me the manual and download the software, and you can do that. But I really would rather you learnt a bit more, because like I said, it's stupid that there's hungry people in the world and that's making somebody money. Okay, so I should say, if you look at those links that I put on, you'll see right at the bottom of them, I'm chairman of the Lumbar Trust, which is, I'm co-chairman with Lord Karambilamori of the Lumbar Trust, which looks after widows and orphans. So what I say to all my students is, once you've made enough to take care of your expenses and you're happy and your family's happy, please consider whether it's my charity or others, have a look. So Lord Lumbar set it up to look after widows and orphans, and our patrons include David Cameron and Tony Blair. So whether you might hate both of them, sorry. Anyway, that's where we are, and it's falling through the roof, falling through the floor is that one, or crashing through the floor is the S&P. That's probably been the most successful trade today, I suspect. So again, thank you, and well, I'll leave you with that. So hopefully you'll join on the journey and look forward to it. Yeah, Sandeep, just drop me an email. We'll take care of it on the email. No worries at all. Thank you all very much indeed, and Happy New Year and happy prosperous New Year to my new students. Let's make it your best year ever. Thank you, students, one and all, very much. Thank you.